Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at Riot platforms.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis.
Yeah, let's do it.
We really have to start with the recent financials because they were, honestly, they were phenomenal.
Phenomenal is the right word. Tell us about those Q3 numbers that really, turned some heads.
Well, the top-line revenue for Q3 2025 hit a record, $180.2 million.
Okay, and what was that compared to last year?
It's more than double. They did $84.8 million the previous year. And the core driver, of course, was Bitcoin mining revenue.
Right.
That jumped from $67.5 million all the way up to $160.8 million.
Wow. And that kind of performance, that's what flipped the entire net income story for them, wasn't it?
It absolutely did. I mean, they went from a very large loss last year to a net income of $104.5 million this quarter.
That's just huge momentum.
It is. And the adjusted EBITDA was also massive at $197.2 million.
But what's really fascinating to me and what I think shows their operational strength is the margin expansion.
Exactly. The mining gross margins. This is the key number. They hit 59% in Q3.
59. And that's up from what, 42%?
Up from 42% year over year. This just shows serious operational efficiency. And it's because their hash rate utilization rose so substantially.
Okay, and speaking of the balance sheet, I mean, they're not exactly short on capital for all this growth.
Not at all. They closed the third quarter with over $330 million in unrestricted cash.
And that's before we even talk about their crypto holdings.
Right. They also hold nearly 19,287 Bitcoin.
Which is valued at, what, around $2.2 billion? That's a really powerful asset base.
It is. But, the true core of the story isn't just the mining numbers.
It's the pivot.
It's the pivot. It's the infrastructure revolution they're trying to lead.
Yeah.
Their competitive edge, their moat. It comes from the vertically integrated power infrastructure.
Okay, let's unpack this a little. So vertical integration.
Yeah.
That just means they control their own power supply, right?
Yeah.
Which is obviously critical in an energy-heavy business like this.
Exactly.
But how are they monetizing that control beyond just, mining Bitcoin?
That's where it gets really interesting. They are leveraging their 1 gigawatt Corsicana data center campus.
1 gigawatt. That
Yeah.
is just a massive facility.
It's huge. And this infrastructure, it allows for really flexible monetization. So yes, they can mine Bitcoin very efficiently.
Or they can use that power setup for high-performance computing, HPC, and AI data centers.
Precisely. And this is where that potential $1 billion opportunity comes into play.
Okay, so that's the number that's been floating around. The Corsicana facility could potentially have a revenue stream of up to $1 billion from future AI and HPC contracts.
That's the speculation, and it represents a massive diversification step away from being purely exposed to Bitcoin.
It also gives them, I'd imagine, instant protection against competitors.
It does. I mean, they are leveraging their power strategy so aggressively. You can see it in the 76% year-over-year growth in power credits.
So they're actually making money by not mining sometimes.
Yeah, they earned $2.3 million in November alone, just from that. So this infrastructure is an incredibly valuable asset in itself.
But, okay, despite this phenomenal fundamental story, all these great numbers, this big AI pivot, the stock has seen a pretty recent pullback.
It has, about 13% weekly.
So for you, the listener, you might be asking, why are the shares dipping when the company seems to be performing so well?
Well, the primary risk here is just volatility. It's priced in. I mean, that recent 10% drop in the stock, it almost perfectly mirrored a 3.5% slide in Bitcoin's price around mid-December.
So the market still sees them as a crypto-correlated stock, first and foremost.
It highlights that ongoing tie, yes, despite all the positive news.
However, it seems like some analysts are viewing that pullback as more of an accumulation phase.
That's right. The sentiment suggests they are, by some measures, 51% undervalued against a fair value of around $27.50.
Which is pretty significant upside.
What's so fascinating is that the operational metrics just keep improving. Despite these short-term market dips, they just hit a deployed hash rate of 36.6 EHs.
And that's a 19% increase year over year.
19%. So this continuous growth, it really implies a pretty big breakout potential when or if the market market sentiment improves.
We also saw that the November output was 428 Bitcoin, a slight decrease, but their overall holdings are way up.
Right, their holdings are up 70% year over year. They're now at 19,368 BTC.
And that growth in their treasury, that kind of mitigates some of the risk of a temporary mining slowdown, doesn't it?
It does. It gives them a huge cushion. Now, while this AI pivot is a very strong story, we do have to acknowledge the bear case.
Of course.
One key risk remains the financing. The financing required for that 1 gigawatt Corsicana campus.
A project that big carries potential dilution risk
Mhm.
if they need to raise more capital.
It's a real concern. If they have to issue more stock to fund it, that's a risk.
And there are also some, underlying concerns about cash burn and negative pre-tax margins if you take away the big Q3 tailwind.
Right. The question is, can they sustain this without just relying on Bitcoin's price?
So with all that in mind, what are the near-term catalysts? What should we be watching for that could push the stock past this volatility?
I think the immediate focus has to be the Q4 2025 earnings report. That should be out late February or early March 2026.
And the market consensus is what? That they'll see continued sustained revenue growth.
Yes, building on that massive Q3 beat and all the capital expenditures they've been deploying.
And speaking of CapEx, they are investing a ton in that infrastructure right now.
They are. $153 million planned for Q4 alone. Now, about $70 million of that is for miners, but, and this is the important part, $61.2 million is for the infrastructure itself.
So we should expect to see some updates on data center milestones,
Yeah.
specifically the initiation of that 112 megawatt core and shell phase.
If we see that, it's a huge signal. But connecting this to the bigger picture, the real speculative catalyst to watch for,
Is the first big contract.
the first HPC lease, sometime in early 2026. If they confirm that AI pivot with a large contract, that will be a major, major driver for the stock.
And then, of course, you have the macro tailwinds like a continued BTC recovery and just the massive surge in demand for AI data centers in general.
All of which supports the strategy.
So what does this all mean? It seems like Riot Platforms is in a really strong financial position. They're using their massive Bitcoin treasury and their robust power infrastructure to strategically pivot.
A pivot toward the more stable, high-growth AI data center market.
Right. The fascinating shift.
And it raises a really important question for you, the listener. How quickly will the market value Riot not just as a miner, but as a critical infrastructure player?
It feels like the investment thesis here is definitely a multi-year hold.
It is. You're banking on the successful monetization of that huge HPC capacity.
Well, if you enjoyed this analysis, please subscribe, like, and comment below to support Smart Wealth with Joshua. We'll be back tomorrow with another deep analysis.